We're going into our afternoon and then into the rest of this week. We're starting off here on the ES, and you can see here that we're in weekly extension long levels. The targets are up at 71.3950. There are traditional daily longs here that we dipped into last week and have broken out of opposing measured move shorts inside, which confirms profit targets up at the 71.5675. As we are going into the beginning of this week, what we are watching for is what level of pullback or how shallow of a pullback that we might have here leading into the beginning of this week. And the answer to that question here has been answered somewhat by the VIX in terms of its February contract. We're looking at the daily chart here. When you drop down to the 4-hour chart, note that we broke through the long from the old contract lows to highs. Now, last week we completed a profit target, and that is what created the, again, indices sell-off back down into that double bottom, and then the rally on the indices as the VIX completed its profit target inside of this traditional short setup. Then we broke through the long setup. We pierced the 61.8% line. Now, we never actually made it back up into a full 50% retracement short from highs to lows. And you can see here that there's been an incredible front run of our resistance levels in terms of those next measured move shorts in our series. And this goes along with what we've seen here on the indices. These indices are essentially going straight up. And what we can do as we go into our afternoon is we can trail these overnight highs to lows. And if we're holding below these 1898s, you're rounding up to 19 and then adding a tick, 1905s, the VIX can go straight down, the indices can go straight up. But there's another reason that we're trailing that short setup from our morning highs to lows here. And it's because when we look at the individual contract, and I'm going to go back here to the daily charts for a moment. When you're looking at the old contract lows to new contract highs, there's something interesting in that the brand new contract, and I'm going to take you to the expiration calendar here for a moment. The VIX expiration is, we're going into rollover tomorrow so it's Tuesday going into Wednesday is the rollover. So the February contract expires next week, Tuesday, Wednesday. So this week, Tuesday, Wednesday is rollover. And so the new March contract is becoming a higher volume instrument. When you go and look at the March contract, it's actually much higher in volume than you normally see on a Monday before rollover. This is many times, it's almost like 25% many times when we're coming into rollover. And the between rollover and expiration, it's slowly building volume. There is a considerable amount of volume in the new March contract. And so we have to contemplate that market participants are trading that new March contract. And so when we go and look at where the March contract is, the first thing that is interesting is that when you're drawing the pullback from the old January contracts to the new contract highs, so we're simulating or have to simulate this on the March contract, it's the 1580 to the 2215. So that's obviously broken inside of the continuous contract. It certainly is. But when you go to VXH26, that 1580 to 2250 hasn't broken a 61.8% line. In fact, it's sitting right inside of it. And although we've been front run inside of a 50% retracement short from last week's highs to lows, just like we were inside of the February contract, the long from lows. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.